And thank you for staying tuned. And as part of efforts to align financial systems with the Sustainable Development Goals and catalyze national regulatory actions, the Financial Center for Sustainability Lagos, through the collaborative partnership of FMDQ Group and other key stakeholders in the Nigerian financial market, has kicked off what it called the Green Tagging Project. Well, let's get to understand what this is all about. I'm being joined by the head International Cooperation UN Environment Program Inquiry, Mr. Marcos Mancini. Good afternoon, Mr. Mancini. Thank you for joining us on the program.
Good afternoon. Thank you for having me here.
So what is the purpose and objective of this Green Tagging Project?
So the UNEP inquiry into the design of a sustainable financial system has been engaging with Nigeria for quite some time already, more specifically in the development with FMDQ of a Nigerian Sustainable Finance Roadmap. As part of the roadmap, we identify as a need the need for the Nigerian banks to develop a tagging system to identify green and brown assets. This is something that has been under development in the international context for quite some time already. One example is the EU Green Taxonomy, Sustainable Taxonomy, but several other countries have been developing their own taxonomy. So the purpose of the program is to work with a couple of banks to review their portfolios, identify their green and brown assets in their loan portfolios, provide strategic recommendations in terms of products and how to migrate those products into capital markets to attract foreign investment, and develop a reporting framework for banks in Nigeria.
Mr. Mancini, why Nigeria, and how does this initiative align with FMDQ's Green Bond Market Development Program?
Well, I mean, in order to expand the Green Bond Market Program, potential issuers are financial institutions, certainly. Now, by reviewing their portfolios, one would be able to identify those green assets and eventually migrate those assets into capital markets to provide more liquidity for financial institutions to keep lending, hopefully, to green projects.
So what are the key opportunities for the participating banks, and how does this impact participating countries in terms of access to international funding for impact-related projects?
Sound is cutting a little bit, but so the key opportunities for banks are basically in terms of, well, gaining extra liquidity, I would say, to continue financing green projects, attracting foreign investors, which are currently seeking this kind of assets. So there are several $1 trillion in assets under management from institutional investors worldwide who have the mandate to invest in green.
And Zimbabwe's State Power Transmission Company says it will increase its electricity tariff by 19.02% from March the 1st due to rising inflation and a weakening exchange rate. The Southern African nation, which is enduring daily power cuts lasting up to 18 hours, last increased the tariff by 320% in October, saying this would help increase supplies. And growth in private sector credit in South Africa slowed to 5.01% year-on-year in January from a revised 6.12% in December. Data from the central bank showed expansion in the broadly defined M3 measure of money supply quickened to 7.02% in January from a revised 6.15% in December. And still in South Africa, startup is hoping to cash in on a growing global taste for canned wines as a lighter, more convenient alternative to bottles. The The startup's cans of premium red and white wines are the first to be certified by South Africa's Wine and Spirit Board.
Fancy a celebratory trip after a hike, but you're worried about lugging a wine bottle up a mountain? Fear not. A South African startup has launched a range of canned wines and is looking to expand. Based outside the country's tourist hub, Cape Town, Uncanny hopes to cash in on a rising global trend where millennial wine lovers are moving away from the bottled wine. Its cans of premium red and white wines are the first to be certified by South Africa's Wine and Spirit Board and are also vegan-friendly.
The initial response has been overwhelming. It's going really well, so we're within the next few weeks or few days will be available country.
Uncanny is first targeting a domestic audience before taking a crack at the lucrative export market, where it could win a slice of an industry that is expected to be worth $400 billion by the end of 2023. South Africa produced more than 820 million litres of wine in 2018, making it one of the top 10 producers globally. According to an industry body, it recorded total sales of about 25.5 billion rand, that's about $1.7 billion in 2018. Vlok says he and his colleagues have been working on the concept for Uncanny for the past 2 years, including researching the US market where canned wine is already well established.
We're very close to exporting to the US, where this market is well established, and I think the European market is especially responsive to our the benefits that we add on our product, which is no sulfur added and vegan friendly.
Uncanny sells its 250 ml aluminium can for about 40 rand at about $2.67 each, using unpopular Chenin Blanc and Merlot grape varieties. It expects to launch a Pinotage Rosé soon. At the Wien Boutique Wine Bar in Paarl, which recently started stocking the canned wine, customers seemed pleasantly surprised.
Yeah, I like the fact that the packaging is very eco-friendly and eco-conscious. That's a big thing that especially the millennials are after. And also it's very convenient. I mean, if you're a group of friends, each one can just get handed a can, and I think that's very nice.
It's the same quality and it's just more convenient to carry around also, and it's quite enjoyable. Drink from a can.